Everyone talks about wanting $1 million. The real question is, what's the most achievable way to get there? Is it stocks, real estate, retirement accounts, or taking a high-risk swing at crypto and startups? Let's unpack the real math behind building $1 million. The stock market has created more millionaires than almost anything else. A simple S&P 500 index fund, no trading, no stock picking, has returned around 10% per year over the long term. That means if someone put $10,000 into a basic index fund and never touched it, history suggests it could turn into over $1 million in about 44 years. And if you actually keep contributing regularly, just $500 a month at that same return rate can grow into $1 million in around 30 years. Real estate is another path, and it's not always the highest return on paper, but it has a secret weapon: leverage. If you put 20% down on a property and that property rises just 10%, your equity just jumped by around 50%. Combine that with rental income, which can add 6 to 7% a year, and suddenly real estate is competing with stock-like returns, plus it throws off monthly cash flow. For people who like the idea of real estate without the hassle, publicly traded real estate funds let you invest in property portfolios through the stock market. Then there are retirement accounts like 401ks and Roth IRAs. A 401k lets you invest with pre-tax dollars. A Roth IRA lets your investments grow tax-free, meaning if it hits $1 million, every dollar is yours with zero taxes when you withdraw. A lot of people hit 7 figures simply by maxing these out consistently and letting compounding take over. Now there's the high-risk, high-reward bucket. Crypto has had insane returns in certain years. Bitcoin has averaged over 50% annual returns since launch, but with that comes brutal crashes, down 80% multiple times. When it comes to style, most millionaires don't sit around day trading. Most simply put money into low-cost index funds, real estate, or retirement accounts consistently and let compounding do the heavy lifting. So how do you start? If you only have around $1,000, your focus shouldn't be on getting rich fast. It should be on contributing more. Even small regular deposits matter more than obsessing over returns. With $10,000, you can start building a real portfolio, maybe a broad index fund, a dividend ETF. With $100,000 or more, you can diversify. Stocks, REITs, maybe a rental property down payment, retirement accounts, and even a calculated allocation to crypto or startups if you understand the risks. You can build wealth the slow way, or you can use smarter tools to catch opportunities faster. Tools like LevelFields AI were built for that. It tracks thousands of companies and alerts you when something meaningful happens, like mass layoffs, an activist investor stake, or buybacks. The same types of catalysts that have built fortunes for traders and long-term investors. And whether you're building a long-term portfolio or hunting high-conviction trades, with these tools, you're not just investing, you're making informed, event-driven moves. Follow and subscribe for more. LevelFields Elite Investing, Effortless AI.